This is what I talked about with the fingerprint of flood insurance. Usually you'll see me in this image, but it's not in here because it's CE. If you want to take a picture of this a little bit, these are really the factors that drive a rate now with risk rating 2.0. As I mentioned before, it used to be flood zone X, AE, maybe an elevation certificate. With elevation now, you've got distance to your lowest grade. So a crawl space is no longer considered the lowest grade with FEMA now. It's the next level up, which is very great for the customer and using that lowest rated floor. Distance to water, this is a big struggle we're seeing right now. So if you have a dried up creek in your backyard, your rate very well could skyrocket because FEMA considers that to be a water source. There may not have been any water in it for 20 years, but they're looking at distance to water. That's a big thing. Maybe if you have a pond behind a business, they don't think about that water source. That could be a big driving rate factor. Flood frequency. This is a big thing that's used now is you've got a lot of these areas that experience flash flooding a lot throughout the year. Let's just use Houston, Texas, for example. Not even looking at hurricanes. Houston has a big problem like New Orleans does. So they have a lot of excessive rainfall floods throughout the year. Nashville, Tennessee's had several the last few years. St. Louis. And so those things are driving the rate as well. Type of flooding. If you're in Wilmington and you have coastal flooding, or if you're in Winston-Salem and you have flash flooding, those are two different types of flooding sources that they're looking at and determining that rate. And then replacement costs. Really, this can be something that's very dangerous on the commercial side. So on replacement costs, you don't have to use it necessarily to set up a policy. FEMA's putting it in there, but replacement cost has a big impact on the rate. So let's just say that you have a $250,000 policy and the replacement on the home is $450 compared to a house with $250. Rate could be 40% higher, even though you're not taking out any more coverage. So you really want to pay attention to this. And where we're seeing a big impact on replacement cost is actually on the commercial side. So a lot of times with FEMA now, write your own carriers, they don't have the data to do the replacement cost. So let's just say someone comes to you, you're writing a policy for $500,000, and of course you do the coverage for $500K, but the replacement cost is really $2 million because they're going to ask for a replacement cost estimator. That rate can skyrocket. We just actually had that happen this week with an agent that was setting up a policy for a business owner, and they got this rate of $1,000, and they reached out to us, and we were looking at it. We said, here's the problem here. In 3 weeks, when FEMA reaches out to you and says, hey, I need a replacement cost estimator, the rate's really going to be $2,200, which could create a really bad experience for the customer on the back end. When they come to you and say, why's my rate going up $1,200? It's that replacement cost estimator. So if you're doing the building on its own, not flood, just use that replacement cost estimator. There's a company called Massive Cert. That's MASSIVECERT.com. If you want to get one from them, I think they charge a couple bucks to do it. We use them a lot if we just need a replacement cost estimator on the commercial side. So that's really something you want to pay attention to when you're writing these policies, is that replacement cost can really come back and bite you if you're not careful. So let's talk a little about these elevation certificates. You heard me mention before, they're no longer required.